Good morning, everyone, and welcome to Genex Power's FY23 Investor Webinar. My name is Saskia. I'm part of the Investor Relations team, and I will be hosting this call. With me today is Genex CEO James Harding and CFO Craig Francis. At this time, all participants are in listen-only mode. A Q&A session will follow after the presentation. If you wish to ask a question, please type your question into the Q&A box and I will read it out. This call is being recorded. I will now turn the conference over to James.
Yeah, thank you, Saskia, and good morning, everybody. Thank you very much for taking the time to join our webinar this morning to talk about our results for the last financial year. Been another very good year for Genex, albeit a very busy one, dealing with an issue at the Kidston Pumped Hydro project, the water ingress, but we've dealt with that extremely well. I'm very proud of the team and how they responded to that, and that's now very much in the past. So we're really cracking on with that project. We've energized the Baldercombe battery project, which we'll talk about. And yeah, the team's really been working hard to deliver the pipeline of projects. So lots to talk about. I will be letting Craig do much of the talking on this call. As many of you will know, I will be stepping down as CEO at the end of this month and handing over to Craig, who will be the CEO from 1st of September. So he'll do a lot of the talking to most of the slides. I'll confine myself to a few opening remarks and closing at the end and an update on the hydro project. So we'll just, after an introduction from me, we'll talk about the highlights of the 23 financial year results. We'll talk about our committed portfolio of operating solar farms and the two large-scale storage projects under construction. Our very exciting development portfolio, which we're working hard on, and then a few slides, as usual, on the industry backdrop, the energy transition that's very much underway and in full swing, and Genex's strategy to capture the best value and benefit from that over the next 3 to 5 years, and of course leave time for Q&A at the end. So the market cap of the company at the end of the financial year was $208 million. Just under 1.4 billion shares on issue, total debt of 617 million, of which 229 million undrawn, and cash just about $50 million. So on the next slide, this is just our sort of Genex 101 slide. As you'll know, we're developing a really exciting portfolio of renewable energy projects and storage projects in the NEM, mainly focused in Queensland and across a range of technologies, large-scale batteries, pumped hydro, wind and solar. We have a portfolio of over $1 billion now, of which the two solar farms, 50 megawatts each, are in operation very successfully. Our two large-scale storage projects, the pumped hydro and our first battery at Baldercombe, under construction. And as I mentioned, a very exciting pipeline of development assets, over 2 gigawatts, which we're pursuing vigorously. We generated 785 gigawatt hours of electricity and saved close to 650,000 tons of CO2. We are an innovative company. We're building the first pumped storage hydro project in Australia in 40 years, the first by the private sector. Our Baldercombe battery project is essentially a merchant structure in a very innovative configuration, and we're looking to play a leading role in the transition to a clean energy future by being innovative in what we do, and providing renewable energy and storage projects which have significant value for shareholders. So I'll hand over to Craig to talk through our portfolio.
Thanks, James, and good morning, everybody. Great to have the opportunity to speak to you today. Look, this is a pretty familiar slide for most, but I'll just go over it for anyone who's sort of new to the company and just recap on what the portfolio looks like today. As most people will know, the company was founded on building a pumped storage hydro project at what underpins the Kidston Clean Energy Hump, where we have 300 megawatts of what we call committed assets. That's the 250 megawatt pump storage and a 50 megawatt solar farm. This pump storage in construction. The solar farm has been operating since 2017, and plans for a stage 3 wind project to take the total capacity there to sort of 550 plus megawatts. We also have the Baldercombe battery project in central Queensland, which we announced is energised at the end of June and is now in the commissioning phase. We expect that to come online around October, ahead of the summer months. New South Wales, the solar farm, the Genex solar farm, which has been operating since 2021, that's 50 megawatts, and our newest project, which is Bully Creek, a multi-stage battery and solar project of up to 2 gigawatts, which we'll talk about later in the presentation. I'm just stopped firstly on the results. This is a results presentation, so we'd be remiss of us to skip over that. But for the full year results, which we announced last week, solar farm generation of 218 gigawatt hours for the year. That was slightly down on last year. I think the main contributor to that was the poor irradiance over the period. Had a few La Nina summers, which has hampered generation for both farms. We're optimistic that it's going to look a lot better for FY24 coming into an El Nino weather pattern. In terms of revenues, the 2 solar farms did $24.2 million for the full year. That was down 9% on last year. The main driver of that was the return of wholesale energy market pricing back to sort of more sustainable levels. We had quite a bit of disruption in the market in the sort of final quarter of last financial year, which carried over a little bit into July of this financial year as well. But that pricing we saw return to normal, but still at elevated levels from where it has been sort of 2 or 3 years ago. Kidston Solar One revenue was $11.5 million, averaging $99 a megawatt hour. The reason for that being above the PPA price of $88 is really 2 factors. That price, the PPA price floor mechanism affecting or coming into play early in the financial year when we had that elevated pricing carry over into July, and also some avoided loss revenue, which is revenue we received from the network service provider as part of some transmission efficiencies that the project creates. Gemelong, $12.7 million, another good year, and that was average pricing from green certificate sales and electricity of $123 a megawatt hour. The group EBITDA of $11.2 million was down on last year, but it did include about $1.6 million of one-off items owing to the M&A costs associated with the M&A approach last year, and some refinancing costs that were captured in the P&L. We think, in comparison to the revenue change, and we'll talk about that on the next slide, that we are really getting a handle on costs, and there is a real pathway to profitability for the business. Operating cash flow, we reported this in July with our quarterly, but the full year operating cash flow of $4.3 million, another strong year, and that marks 2 straight financial years of positive operating cash flow. So really underlines the trajectory of the business. In cash position of $49.6 million. The cash does move around as we spend funds that have been committed for our construction projects, but that's the change that's reflected there. And only 1 LTI for the year, which we're obviously we're focused on every LTI, but that's a really good result when there's 300 plus people in a large scale construction project at Kidston. So just on the financials themselves, on the balance sheet, the only real point to note here is the net assets did reduce over the period. The reason for that is just a change in the accounting treatment of the 2 joint development agreements on Kidston Wind and now Bully Creek. They're now being accounted for using the equity accounting method, which means that in FY22 those assets were captured in the consolidated figure. So that's the only real change. In terms of the cash flow, we spoke about operating cash flow down from last year due to the lower revenues, but still a really strong year and 2 years straight of positive operating cash flow. And I mentioned the P&L, but the main thing to point out here is the net loss of only $1 million compared to $4 million last year. It's a record net loss for us, a good record, and look, what it demonstrates is a clear pathway to profitability for the business. The costs are relatively stable, but next financial year we're going to see the Baltic battery resulting in the first or the next step change in our revenue. So that should really flow through to the bottom line, and we should be in a position to be reporting our first net profit next for FY24. A couple of other points to note in the financials. One point that's sort of in the annual report is we do have $63.6 million in accumulated tax losses that are building up. which basically means that we're not going to be paying tax on our project, on the cash flows from our projects well into next decade. So all that cash is available for distribution to shareholders at the right time, at the discretion of the board. And lastly, at 30 June, we announced a new corporate facility with J-Power, which was a big piece of news for us, and a reaffirmation of the partnership that we've been developing with J-Power. It's essentially a shareholder loan, which will be used to replenish the working capital and contingency that was used in late 2022 for the water ingress event for the Kidston Hydro project. What it does is it re-establishes a substantial buffer for us as we go into the final 2 years of the construction of that project. So we were very focused on replenishing that contingency and restoring those buffers. It's a complex project. We want to make sure we're in a sound position going into the conclusion of construction, and this does it in a non-dilutionary way. So we're really pleased with the outcome at 30 June and the support shown by J-Power. This next slide is a new slide that we're sort of showing today, just to give an idea of the funding profile of the overarching facilities of the business. That's $617 million of debt that was drawn at 30 June. That's sort of made up of 5 facilities principally. The senior facility for the solar farms, which had $155 million owing at 30 June. That has 2 hedges in place, which run to 2027 and 2030. There's sort of 2 hedges that run to those dates. And the important to note here that it's quite a common structure of debt facilities in the renewable energy sector. We have short-term facilities but a long-term notional tenor. So essentially the debt gets fully repaid in 2039, but we refinance every 5 years. And so we've got a refinancing milestone coming up at the end of next year, which we're going to be addressing in the new year, and looking to roll that facility over for another 5 years. And really what that does is enables you to capture more attractive pricing when you've got a fully operational asset with a track record of solid operations. The KS1 Gemelong subordinate facility that we refinanced last year in July, that matures at the same time as the senior facility. The idea being we'll roll that into one refinancing, $12.2 million outstanding at 30 June and fixed interest. The NAIF facility, which I think everyone knows about, a 15-year facility that matures in 2036, long-term fixed interest and attractive concessional interest rate, $418 million drawn at 30 June, which sort of demonstrates, that we're getting on well over the halfway point of the construction program as we conclude that. And then the BBP senior facility with Infradebt, which is largely drawn, just a final piece to go as we conclude construction. And that again is a fixed interest loan for 12 years of operations. So what this looks like is basically 99% of our debt is hedged out to 2027, 2030, and the only one that rolls off then is the senior debt facility for the solar farms, and that average interest rate is 3.02%. So there is a reasonable amount of debt in the business, but it is largely hedged at really attractive interest rates and with high quality counterparties. And the bulk of that as well is a government lender in NAIF, who's been very supportive of Genex and our projects to date. So just going through to our committed portfolio, this is again another familiar slide, but really what we wanted to highlight here is what we're on the cusp of at the end of FY23 and going into FY24. We really are now looking at the next step change in our revenues as we bring on our 3rd operating project in the Baltic Battery project. So you'll see that FY24, we're expecting the revenues to step up again as we get about 9 months of contribution from that project in FY24. And obviously FY25-26 is when we get the half year and then full year contribution respectively of the hydro project. But that looks like annual, in terms of the outlook, that's average annual revenues of $95.6 million out to 2055. 83% is contracted and with consistent EBITDA margins across the technologies of sort of 75% thereabouts. And of course, these projects, once you build them, there's very little spend to keep them going. So I might hand back to James to talk about Kidston Hydro project. It's a project he's going to remain involved with in a consulting capacity post-retirement. So I'll let him speak to this for probably one last time.
Thanks, Craig. Yes, a pleasure to do so. So some of you will be familiar with this slide. It's obviously our flagship project, changing the game for Genex certainly, but it's a key piece of infrastructure for the energy transition, particularly at the location that it is in the north of Queensland, remote part of the country and a weak part of the electricity network. So it's a 250 megawatt 8-hour storage facility, as you'll know. I mentioned the first pumped hydro project in 40 years, the first delivered by the private sector. It's really groundbreaking stuff. We've got a strong offtake arrangement with Energy Australia up to 30 years fixed and inflation linked, and very strong support from federal and state governments financially as well as morally, I would say. The NAIF, the North Australia Infrastructure Facility, extended the biggest loan ever, over $600 million, long-term and low interest rate. We got a grant from ARENA, just under $50 million, and very strong support from the Queensland state government in co-funding the transmission link for the hydro to the electricity main transmission network. And what it does is it unlocks the renewable energy generation potential of the north, particularly at Kidston, but also the northern part of the state, and provides system strength to that weak part of the network. We've got a fixed price lump sum contract with 2 tier 1 contractors, John Holland McConnell Dowell, and we're still on track to energize the project by the end of 24. That picture there on the right is a very, very good shot taken by a professional photographer very recently. And so you can see in the background, actually the hills right at the top left of the picture is where the wind project, which we'll talk about, will be located. In the sort of middle ground, you can see the solar farm, which was our first project at Kidston. And then the 2 pits, which are forming the upper and lower reservoir of the pumped hydro project. You can see now quite recognizably the upper reservoir, which is the one at the sort of top of the picture, the Wisers Dam. You can see the elevated dam construction that's now very clearly visible around the outside of that dam, which will form the upper reservoir. The next slide will show more clearly what that will look like once it's complete. The Eldridge pit is the lower reservoir in the near ground, and to the right of the picture you can see the contractors' site offices, laydown areas, workshops, and the aggregate and concrete batching plant. So pretty good picture showing real progress at site. And so this sketch here just shows schematically what that will look like. In the middle, the light blue area will show the filled upper reservoir once the dam's complete and the water's been filled into it. And what happens is the water will drop through twin vertical water intake shafts at the top end of that reservoir, 230 meters straight down into the pink structure on the right, which Craig is showing, into the powerhouse cavern, and drive the 2 reversible pump turbine generators, and the water will flow out through the horizontal tail race tunnels into the lower reservoir, and then the whole operation goes into reverse to pump the water back uphill to store again. So on that underground works, just to say the main access tunnel is that white looping tunnel, and the realignment which took place after the water ingress event is that yellow section, which with an additional spiral added to keep us away from the water feature. Pleasing to say that we are getting very close to the powerhouse, and we're actually at the nearest point on that yellow main access tunnel to where the water ingress event occurred, so where that feature was, and we've encountered no water and very good rock structure still. So we're at the closest point now, and we will start to curve around back into the powerhouse, and about 150 meters to go. So that's very pleasing and very much satisfies us that the risk there is behind us. As you'll know, the 2 vertical shafts, the cable shaft and the vent shaft, the red and the light blue, have been completed. The 2 water intake shafts are now the focus. The first one is about a third complete. The pilot shaft has been drilled, and the raise bore is about a third the way through. And the two head race tunnels, those are the horizontal dark blue tunnels that connect the bottom of those shafts into the powerhouse, are complete. So really progressed on the underground workings, and we're looking to complete the bulk of those by the end of this year. So just a final slide to show at the bottom, you can see the timeline which we show each time, and that's progressing well and still towards energization of the plant by the end of next year. We talked about the underground workings. All the equipment from Andritz, the turbine generator equipment, the big transformers, and all the key embedded parts have all been manufactured. Most of them have already been shipped to Australia and are either at Townsville Port or are on their way to site now. So over the next 6 weeks or so, we expect shipments and deliveries to site will continue, so that within the next couple of months, we expect all the key equipment to be already on site, stored ahead of the wet season, ready for installation in the underground workings. The pictures there, you can see top left, a good picture of the dam liner installation on the upper reservoir dam wall. That's the black feature there, which is the welded HDPE liner. So all the earthworks have been done for the dam. The screed is virtually complete, and we're about a third of the way through putting the final layer, the HDPE liner, on. In the middle, you can see the power station cavern. That's the top section with the crown, which has been fully supported, and we're now in the process of installing the crane beams for the overhead traveling crane, and then we'll start benching down the powerhouse cavern to the lower floors. And on the right, you can see just a couple of the tunnels. This is one of the head race tunnels that's well progressed and is actually now complete. There's a considerable number of tunnels, obviously the main access tunnel, the head race tunnels. We're starting the tail race tunnel shortly, and construction adits of various types, multiple headings underground, and the progress is really pleasing. So I'll hand back to Craig to talk about our other big storage project in construction while in commissioning, Baldercombe Battery.
Thanks, James. And from complex multidisciplinary construction to relatively straightforward construction, the Baldercombe Battery project, all the physical works were completed in June 2023, and we announced late June the energisation of the plant and the mega packs, which was a great milestone, and certainly very pleased to have delivered another project on time and within budget. What follows that energisation is a period of commissioning, where we move through the various hold points and undertake tests to meet our performance requirements with AEMO and Powerlink, and we're working our way through that. The project does benefit from a very unique offtake agreement, which provides a guaranteed level of revenue, but importantly provides significant exposure to upside above that level, and one that we're very excited about heading into the peak summer months. Now that PPA will commence from the commercial operations. However, during this commissioning phase, while we complete the final testing and get the final sign-offs from Powerlink and AEMO, we are operating the plant, and we're operating as we speak. We're sopping up some negative pricing in Queensland, which is fantastic to see. So that will all contribute to pre-completion revenue, which will flow straight through to Genex, which is sort of a great advantage to having these things online and operating while we're commissioning. So really looking forward to having this project come online ahead of the summer. We're expecting it to be a pretty critical summer after a couple of benign summers with lower solar irradiance and reduced demand due to the wet weather and the seasonal weather patterns. But as we said in the earlier slide, we're expecting the full operations to be commencing in October. The next couple of slides just talk to our development portfolio, the two projects, Kidston Wind and Bully Creek. Both projects are being developed 50-50 with J-Power, and maybe I'll just talk to Kidston Wind first and foremost. It is a third stage of our Clean Energy Hub at Kidston. As we've said to the market, we've established a solid wind resource with a very favourable profile, which really mirrors the Queensland price curve, providing strongest generation in periods of high pricing. And we've sized the project at 258 megawatts, which is 43 6-megawatt turbines on the escarpment to the south of the solar farm and the hydro project. And we're working with Goldwind, who's our preferred wind turbine generator supplier and installer. Really, the main bit of news on this is we did announce in our results announcement that the timeline for final investment decision is now targeted for 2024. But it remains a firm priority of Genex and J-Power, and there is a lot of work happening in the background to progressively move the project to a final investment decision point. And that will see the project being gradually de-risked with a series of milestones over the next few months. And that will be milestones in terms of offtake, in terms of approvals, funding, and grid connections, and also balance of plant procurement. So there's lots happening in this space, and we expect to see a lot of news flow as we move the project toward a final investment decision. The next project in the development pipeline is the up to 2 gigawatt Bully Creek solar and battery project. The big news on this project in the last quarter of the year was the transaction with J-Power, where J-Power are now 50% co-developer with Genex under a joint development agreement. It's very similar to structure to Kidston Wind. What that does is it brings third-party capital to fund the development costs, which otherwise would be funded by Genex working capital. So we've always been talking for some time about a capital light development model, and this is that model sort of being put into practice. So J-Power brings $6 million of funding, as well as paying the balance of the acquisition costs, which will be used to fast track development of the first stage of this project. We haven't announced yet what the staging will look like, but there is continued engagement with offtake counterparties to inform that strategy. But similar to the wind, we are targeting a FID in 2024, and we'll be looking forward to a series of milestone announcements as we continue to de-risk the project and bed those items away: offtake, procurement, grid connection, and further informing the staging. But really excited about this project and its potential. It is right on the interconnector with New South Wales, where it plugs into the Queensland side of the network, so a really good location with very low loss factors and strategic advantage, particularly for batteries being on an inter-border and inter-regional flow point. So that's proving to be pretty attractive as we continue these discussions with all these counterparties, and huge capacity, up to 2 gigawatts of battery and or solar. Maybe just to comment on both the battery and the wind project, we do get a lot of questions about how Genex will be funding these projects. We obviously have J-Power as a 50% partner in the projects, and while we've engaged advisors to assist us with the debt arrangement side of things, we're also working on introducing third-party partners to the project to give us really optionality as to how we fund the equity component. That gives us options of J-Power diluting Genex, of bringing a new third party in, and Genex J-Power sort of working alongside that partner and free carrying Genex's interest. And of course, if the market conditions are right and the share price is reflective of the value that we're delivering here, then the option remains for Genex to stand its corner. But really cognizant of having optionality for these projects. They're big ticket projects, and that gives us the ability to bring in big, strong balance sheet partners into the project level at financial close to minimise any dilution for shareholders. Just on the industry backdrop and our strategy. And look, this is a very familiar slide. It's been in our pack for quite some time, and really it's not news to everybody that the coal capacity in the national electricity market is required to be retired, and the timeline for that is becoming more and more aggressive, and the pressure from government, from stakeholders to accelerate that is growing. At the same time, that needs to be replaced with new capacity, and you can see the scales on the left-hand side and right-hand side of this chart, that for every megawatt of coal generation that's lost, it needs some 8 megawatts of renewable capacity to be installed. So that provides tremendous opportunity for us to grow our portfolio and grow our presence and play our part in this energy transition. And really, how does that flow through to us? It really flows through in terms of demand for offtake and offtake pricing as a result. It flows through to us in terms of government support from bodies like NAIF and ARENA providing support to working with government to ensure that there's no delays to connections or approvals and things. So there really is a strong impetus from all levels of government to drive, really drive this transition and not cause any roadblocks. And look, the last point is that it really creates a lot of liquidity financiers for high quality projects with proven developers and proven track records. There is significant demand out there from lenders and from equity providers to deploy capital into this sector, and therefore there's an opportunity for us to capitalise on that to fund and grow our pipeline. And then, of course, the other piece to this is what is happening in the daily pricing market, and particularly in Queensland, where most of our assets are located. And what we see is continued and growing intraday price volatility. As I mentioned before, Bouldercombe is currently charging at negative pricing in Queensland at the moment, so it's getting paid to charge, and it will be getting paid to generate this evening when the pricing spikes as demand spikes and solar rolls off. And with the revenue structure of Bouldercombe, we have direct exposure to that through our innovative arrangements with Tesla. I guess what we've seen over the last couple of years is this shape has been a little bit more subdued due to the La Niña weather pattern, where we saw lower solar pushing prices down in the day, and then lower demand in the evening peaks with the cooler summer. But again, we see tremendous opportunity this coming summer for strong irradiance, so strong intraday volatility, and also very hot dry days, meaning the evening peak is significant. That also places a lot of pressure on existing thermal plant, and that creates the opportunity for these contingency events that we've spoken about in the past, which really drive price spikes and enable us to capture significant amounts of revenue for the project. So this dynamic remains, and we're expecting a pretty attractive summer for that battery operation this summer. Just on our growth strategy, and it's unchanged, but I think it's important to note that where we've come from, and this certainly is reflective of James's time at Genex as CEO. He joined us at Genex and we had 0 megawatts of capacity, and became CEO when we had 50 megawatts in operation, and we've grown that now to 400 megawatts of committed generation and storage capacity, which is a substantial growth trajectory from a standing start. But we're not stopping there. We're continuing to push the portfolio further with the growth projects that we've identified and others that we're working on in the background. But what that looks like is taking our portfolio from 400 megawatts committed today to over 1 gigawatt in the next 2 to 3 years with the wind and Bully Creek projects and multiple stages at Bully Creek. So very exciting sector to be in, and we really want to do our share of the heavy lifting as we complete this transition, and working with our partners in both government, in J-Power, and our industry partners, the likes of PowerLink, Energy Australia, Tesla, and other counterparties that we have in the sector. But what we've really established now is a track record of delivery with the 3 projects delivered on time and budget, the hydro being the first in 40 years, and the first done by the private sector, and really capitalising on that is the next phase of our growth. So a very exciting period ahead for Genex. Just lastly, before I hand back to James to close, everything we do with a focus on people and on our obligations to the environment and the community, and that continues to be the case as we deliver on our construction projects, but also as we move through the development of our pipeline projects. So there's a lot of engagement with community in terms of the planning processes for those projects, and in terms of involving the local Indigenous peoples in our development processes and strategies, and bringing them along that journey. And there's certainly an increasing awareness and focus on this from governments and planning authorities as well, that ensuring that we don't complete this transition at the expense of the local communities and the environment. So Genex is very much focused on bringing those aspects of our operations, on the journey with us as we continue to build our portfolio. But look, I might just before I hand back to James, it is his last webinar as CEO, but just very much on behalf of the management team, just thank him for his time in leading Genex and taking us to where we are today, which we think it's what we've achieved to date is remarkable, and it wouldn't have been possible without his leadership. But as I said, we very much look forward to him staying in the tent and assisting us in an advisory capacity as we complete the hydro over the next 18-24 months. So I'll hand over to you, James, just to wrap up.
Yeah, thanks, Craig. I appreciate that. Kind words. Look, I'll just quickly run through the highlights. Many of you would have sort of seen a slide similar to this, but I think we genuinely have created a very strong and diverse renewable energy and storage portfolio of projects that are built, committed, under construction, and that very attractive pipeline we talked about. We've clearly got a strong commitment to ESG, as Craig talked to on the previous slide. Everything we do is with an eye on the environment and improving our environmental sustainability, and working very closely with communities up in remote regions, particularly the Indigenous community, that we're very proud of that experience. I think we've established a proven track record of delivering projects on time, on budget. The 2 solar farms, clearly the Baldercombe battery, which was energized on time, on budget, and is now successfully in the commissioning phase. And the hydro, we've had an issue underground. It's a very complex project, but the way the team has managed that and kept it on track to energize at the end of next year is excellent. We built up in the process some very strong relationships with major corporates, with federal and state government, and we really plan to leverage those relationships as we go forward and capture the opportunities ahead of us. We've got a very strong, we really do benefit from a very strong, stable, predictable long-term revenue stream through these long-term energy contracts, particularly with Energy Australia on the hydro, but also the Solar 150 PPA. So that gives a very good long-term outlook for predictable revenue, but that also allows us to have exposure to what we see as the increasing pricing dynamics, increased prices and increased volatility, which Craig talked about on previous slides. So the battery strategy that we've started with Baldercombe, we look to try to keep some of that upside available for us and for shareholders for our future storage projects as well. Very substantial now, portfolio over $1 billion, fully funded to 400 megawatts, and with strong ambitions to grow that dramatically over the next 5 years. And we just see significant upside from continuing to develop large-scale renewables and storage opportunities, particularly battery, but other storage, pumped hydro and others as they develop. So I think it's a really well-set business. I'd like to thank personally all our shareholders for being with us along this journey. Really appreciated your strong support for me and for the team. And I think we really are together building a sensational business, which is really strongly poised for future growth. And I'd like to say a big thank you to Craig. I'm delighted to be handing over to someone of the quality and talent that Craig definitely has. He's a key part of the team. He's been instrumental in the innovative deals that we've struck till now, and will be so for the future. So I think talking to the shareholders on this call, I think the company is in extremely good hands with Craig and the team that we've built together. So thank you for that, and hand over to Q&A.
Thanks so much for the presentation, James and Craig. So we've now entered the Q&A session. If you have a question, please type it into the Q&A box at the bottom of the screen and I will read it out. The first question is, what's left to be done in the BBP commissioning? Have there been any delays with it?
So I'll take that. So yeah, no, not at all. We're on track. We're going through the commissioning process and the so-called hold point testing procedures with PowerLink and AEMO, the market operator. We are actually on track. These processes tend to need to be a bit flexible because each new generating facility, particularly a battery, which I think is the second standalone large-scale battery in Queensland, people are learning. AEMO and PowerLink are learning all the time. but I'm very pleased to say that we are actually on track with our original schedule. And as Craig has outlined, we are generating revenues in this pre-completion period, which is very pleasing. So we're on track. Touch wood, everything will continue the way it has, and that we'll be completing the whole point testing and get to commercial operation during October.
Thank you, James. Our next question is, interest expense from the solar farms was approximately 45% lower than FY22. Can you tell us what drove this decline?
Yeah, look, I guess this is a bit of an anomaly in the way that the hedges flow through the accounts. There is a balance sheet component in the movement of the value of the hedges, and there's a P&L component with the way that we pay fixed and receive. Sorry, we pay floating and receive fixed interest rates. So there is no real change. The interest rates are fully hedged. It's just the way an accounting anomaly as to how they flow through the P&L and the balance sheet.
Thanks, Craig. Our next question is, a lot of work is being undertaken to enhance traditional transmission capacity, i.e. dynamic rating being just one. Is there any scope in such technologies increasing the current 275 kV transmission line to Kidston to further enhance your assets there?
Yeah, so we have, you will have noticed in our sort of recent announcements that we have optimized and uplifted the scale of our wind project. It is now above 258 megawatts to be precise, is what we've managed to size that project at. And we are in discussions with PowerLink about ways in which we might be able to use potentially remaining capacity with a different profile to wind, i.e. an expansion to our solar capability as well. So it's an ongoing discussion. But the wind farm has already been optimized and upsized to, let's say, what we regard as the maximum capacity available at that site.
Great, thank you, James. Next question is, was there any curtailment that impacted generation from Gemelong during FY23, and was it material?
Look, yes, there was. I think that any solar farm that doesn't suffer from curtailment is probably lying. But I think the overarching impact on generation was irradiance this financial year. So Gemelong does get curtailed sometimes in the summer peak, subject to a constraint equation, not as badly as others in the region. But it wasn't of a material nature in relative to the irradiance impact.
Thank you, Craig. Our next question is, when does indexation to CPI start for the annual fee agreed with Energy Australia for operating Kidston pumped hydro? Will the first payment from Energy Australia already be indexed to the recent sharp increase in CPI index and further increases to the index between now and the first payment?
Yeah, so the way the deal is structured with Energy Australia, it's fully indexed from year 11 to year 30. For the first 10 years, the fee is set in I think it's 2019 dollars. So indexation applies from that date, but it has a fixed indexation and a CPI-based indexation from that date. So there's partial indexation to CPI from that date and partial fixed. And the reason for that is we were really at the time, CPI was close to zero. We were really pushing for fixed indexation to support the NAIF debt, and therefore we ended up with this blend structure with Energy Australia. But certainly the first payment will reflect CPI from 2019.
Thanks, Craig. Our next question is, as an interested observer, it seems underground progress at Kidston is significantly slower than mining. Various hard rock miners report progress of many hundreds of meters of drive per month, but you seem to be suggesting it will take 6 months to do that. Is my impression correct? If so, why is earthwork progress slower at Kidston?
Yeah, I mean, I'll take that. I think I don't have a huge amount of experience in mining. What I will say is a couple of things. Firstly, the rock structure at Kidston is extremely good, as in extremely strong. It's type 1 ground, predominantly underground. That's one thing. So it is painstaking work. But also these are permanent structures that we're constructing, and it's a pretty complex configuration of tunnels, adits, shafts, and the powerhouse cavern that all sort of interact with each other. So it's not just a mining clearing operation. It's clearly excavation, but there's a lot of care needs to be taken in terms of the way in which it's excavated, the way in which it's supported. There's shotcrete, rock bolt structures required. And of course, in the powerhouse, that is a very meticulous activity to support, for example, the powerhouse cavern crown for an 80-year plus life. The crane beam installation is again a very robust installation that needs to be affixed to the top of the powerhouse to enable the overhead traveling crane to travel across it. So it's sort of not comparable. It's mining techniques that are used, but it's a permanent structure with 80 plus year life that's being constructed underground.
Thanks, James. Our next question is, Craig, you have indicated final investment decision for Bulli Creek Stage 1 is targeted for the second half of CY24, yet final investment decision for Kidston Wind is a broader CY24. Are you able to narrow down the wind final investment decision target? Will it be before Bulli Creek Stage 1?
Yeah, look, I think the answer is no. And the reason for that is really the critical path activities for both projects are really around the grid connection process, which is largely out of our hands. It's a power game and a process that we work through and have been working through for some time already. And I guess the wind started earlier than Bulli Creek, but both are being progressed concurrently. So, you know, I think at this stage where we aren't able really to comment much further than we have in the presentation, it may be the case that the first stage of Bulli Creek is closed earlier than the wind. It may, you know, in the first half, it may be the case that that the wind comes first. So we'll continue to keep the market updated as those projects develop. They all have the same sort of work streams, offtake approvals in the case of the wind, grid connection and the like. The critical path is really the grid. So whichever one moves more quickly, will be the first to close, is our expectation.
Great, thank you, Craig. Our next question is, once Bouldercombe and Kidston are online and revenue generating, what will the breakdown be for debt repayment, new investment and dividends? Dilution is already very heavy on many of our projects and in shares, and interest rates are looking to be on a long-term rise.
Yeah, look, I guess I can just make a couple of comments in response to that question. Maybe on firstly on interest rates, I think we showed in one of the slides here that that our interest rates are largely hedged for the long term, so we don't have any exposure to floating interest rates at the moment, and nor will we for the foreseeable future. So that's not really part of our sort of thinking when it comes to capital management. I guess the other point to note is that all the projects are project finance, so debt repayment isn't really a choice for us. You know, we can obviously refinance facilities, but there is a structure of debt amortization for those projects. So there is cash committed once the projects are operational to servicing debt, in the same way that solar farms have been servicing debt since they commenced operation. But I guess probably the overarching point is really capital management decisions are for the board of Genex, and I think we have said publicly that we will consider looking at dividends when the hydro does come online in FY25, and that remains the case. But it's a board matter to be decided at the time based on the circumstances in which we see ourselves. And maybe just lastly, in terms of the comment on dilution, I think we're very conscious of it. We're not looking to actively dilute shareholders if we don't think it's in their interests, and we certainly are establishing a lot of flexibility in how we fund the Bulli Creek and Kidston Wind projects, so that we can ideally add capacity to the portfolio without issuing another share. So that's a deliberate strategy of ours, and we'll continue to focus on implementing it.
Thanks, Craig. Our next question is, for every 1 megawatt of coal removed, you need 8 megawatts of solar and wind. Are you able to outline how you got to that number, please?
Yeah, look, a couple of factors really. I mean, I was just referring to this chart, and you can sort of see it's let's bring it up. In terms of the scales on each side, it sort of just shows how the scales are different. But really, what we're saying here is that wind and solar have capacity factors of sort of solar between 25 to 35%, and wind 35 to 40%. So that means that the megawatts are it's not the same as a coal plant, which has 100% capacity factor. So you need a multiple of wind and solar to provide a firm baseload generation capacity. The second piece here that's not really shown in this chart is the demand. Right, this is a forecast out to 2055 as we're looking to electrify the economy, electric vehicles, and lots of operations that run on other fuel sources being converted to electricity and running from the grid and using clean energy. And so those two factors combined is how we get to those sorts of figures. But it's clearly a multiple of wind and solar capacity is required to replace any coal that comes out of the system.
Thanks, Craig. Our next question is, do you see any opportunity for Genex to participate in the Borumba Dam or Pioneer Burdekin pumped hydro projects announced by the Queensland government?
Yeah, look, I'll sort of take that. I think obviously these are very ambitious projects, and really the Queensland government's energy and jobs plan is very much underpinned by those two very large deep storage projects, assisting that transition to clean energy. Very clearly that there's some conversations obviously going on. Queensland government's been a very strong supporter of the Kidston project, as I said before, morally, as well as with some significant funding contribution. We obviously have a lot of lessons that we've learned in how to structure, develop, and construct large, complex pumped hydro projects, which certainly will be of value to those projects. I think it remains to be seen in what manner and to what extent Genex can formally participate in those projects. Clearly, they are intended to be Queensland government-owned projects at this stage, but we do have a dialogue ongoing with Queensland government and with Queensland Hydro.
Thanks, James. Next question is, can you elaborate on the structure of the Tesla revenue sharing agreement?
Yeah, happy to do so. So we announced this in, I think it was November 2020. Yeah, I'm trying to recall now. And really what we announced at the time was it's an 8-year agreement with Tesla. What it provides for is Tesla will operate the battery, 100% of the battery capacity, using their auto bidder algorithmic-based bidding software. It's been in operation in the national electricity market since 2017 when it was first brought to Australia with the Hornsdale Power Reserve, and operating quite successfully since that time in terms of really maximising the revenue received versus what you could theoretically achieve based on look back. So that they'll be operating on that basis, and they'll also be providing a guaranteed floor level of revenue to us. And maybe just to give an example, so if there's a given quarter where we have a floor guarantee of X, if the received revenue is below that level, then we will issue Tesla an invoice to top us up to X. And if it's above that level, we will share with them a proportion of the revenue above X. So that's kind of how it works. It's really they get a slice of the upside that they generate, and the price guarantee really provides support for the 60% gearing that we've been able to attract into the project. We're really happy with the structure. It's pretty innovative in our view. We think Tesla have only done this once before. Certainly haven't done another one in Australia, and they remain very eager to see the project come online and to begin operating. And we, one of the real benefits here is that both parties are fully aligned in terms of operating the plant to maximise revenue in any given day, week, quarter, or year.
Thanks, Craig. Our next question is, Craig, in the revenue projection on slide 10, has the floating revenue component of the agreement been built in? And if so, how much?
Yeah, so I mean that's reflected in the 83% contracted, 17% exposed to merchant pricing. That reflects the merchant exposure we have on Gemelong and on Balcombe.
Thanks, Craig. We've had 2 questions relating to the kind of touristability of the Kidston site, so I'll just wrap them into one. Are there any plans to resurrect to some degree the on-site historic Kidston Battery for geo-tourist reasons?
Yes, I can take that. So there have been some interest from third parties, I would say, to launch a project to resurrect that historic battery, and yeah, I think we'd be very much in favour of that, and we've already indicated that we'd support that in a sort of benefit in kind type approach, provide some resources to help to facilitate that. So yeah, that's we'll see where that sort of gets up, but I think certainly once the hydro project is complete, there'll be quite a focus on Kidston, and that might well give it some momentum.
Thanks, James. One final question. Are PV manufacturers other than First Solar investigating the next stage of Kidston Solar?
But maybe I can comment on that one. Look, we are engaged with a number of PV suppliers and solar EPC contractors actually around the next Genex project. However, it is most likely that project is going to be at Bully Creek, where we have significant capacity and really good loss factor position there. So that's where most of the discussion has been focused to date, and with Kidston Wind being sort of in priority to the solar at Kidston at the moment.
Thanks, Craig. There are no further questions. I'll now hand back to James and Craig for any closing remarks.
Well, thanks, Saskia, and thanks again to everybody for attending. Thanks for, there's a good list of questions there. We very much appreciate hearing those and being able to respond. And again, this is my last gig presenting on these webinars. It's been a pleasure, and yeah, I'm very much looking forward to supporting Craig on the other side, attending these as a shareholder rather than as CEO. So thanks for your attention, Craig. If there's anything from you.
No, look, thanks again, James. Looking forward to continue to work alongside you at Genex in your advisory capacity and remaining as a supportive shareholder, and of course look forward to attending the next webinar, which we'll be hosting sometime in October following the quarterly result in September. So thank you, everybody, for your continued support.
Thanks, James and Craig. That concludes our webinar for today. Thank you for participating. You may now disconnect.